Hoki mai anō, welcome back. The Reserve Bank has conceded the current high levels of inflation could have been lessened if they acted sooner.
However, a review into the past 5 years of monetary policy has found that overall the central bank's actions were warranted and worst-case economic scenarios were avoided. Alexa Cook reports.
Kiwis are doing it tough when it comes to the cost of living.
Pretty much everything's expensive as. A lot of families, it's hard to get by.
Yeah, it's getting pretty bad. I'm kind of like struggling just to get by, honestly.
And it could have been less of a struggle. A review of the Reserve Bank revealing if monetary policies were tightened earlier last year, then our inflation would not have hit a record 7.3%.
Inflation would have been marginally below where it is now. It probably would have had a 6 in front of it instead of a 7.
If these fiscal policy tools are going to remain as potential use, then we need to have a much better understanding around when they'd be used, how they're being used, so that we can make a better assessment around their effectiveness.
As the pandemic took hold in 2020, the central bank took a least regrets approach, slashing the official cash rate to 0.25% and printing money, lots of it.
They got the big decisions right, that they knocked the sharp edges of what could have been a very difficult time for the New Zealand economy.
We want an independent inquiry into the actions of the Reserve Bank and government spending to see whether that has what lessons we can learn from the past.
The Reserve Bank says that's exactly what this review has done. It found 9 areas for improvement, including data use, policy, development and research. But there are questions over whether it can lift its game.
You need to have people with the requisite skills. And my personal view at the moment is the Reserve Bank is light on both economic and banking skills across the board.
The newly reappointed governor disagrees, backing his team to deliver the goods. Alexa Cook, Newshub.